Welcome to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. Whether you're watching us live at sktrading.live or listening on your favorite podcast platform, we've got you covered. Subscribe, join the community, and get ready to dive into real talk and real market insights. Let's get started.
Hi everyone, I'm Stephen Kalayjian and welcome to the Bull, the Bear, and the Ugly. Wow, what a day. Yesterday I told you we had buy reversals on the 30 and the 60-minute time frames on the underlying ETFs. And today there was unbelievable patterns. We saw volatility like you cannot believe. The S&P futures, I just did the calculation, was up over 210 points. From the 10 o'clock low, 10:30 lows when the S&Ps were trading near 5,600, I think it was 5,600 and a half, traded all the way up to 5,694. From 5,694 all the way down to 5,625 and three quarters, say 5,626. Then the 30-minute time frames kicked in on the underlying ETFs, and from 5,626 up to 5,679. You're talking volatility. You're talking big patterns here. And again, yesterday, once I knew that the spiders reversed the buy on the 15-minute time frame, I knew the lows were in for the day. And when the 30-minute time frame reversed the buy and it correlated with the 15, it was 100% that the lows were in. I stated today to everybody in our community that I stated that, guess what? That there's no way in hell that those lows were going to be violated, okay, from yesterday, that 55.33 and three quarters on the S&P, the new low for the year. So, again, based upon pure math, pure technicals, we came in looking for pullbacks. At 10:30, beautiful pullback on the 15 against the 30 and 60-minute time frame on the spiders, which I'll show you. Big sell divergences on the new highs. Above the 90 level, got to 94, dropped, rallied, pulled in 30, then pushed up about 15 to 20 on the beautiful pattern on the 5-minute time frame, which I'll show you. They dropped over time and ultimately set up. And I said the 30-minute time frames are going to set up here. The 30-minute time frames are going to set up. And that's exactly what happened. If you look here, at the 30, which I'm going to show you, NVIDIA set up perfectly. Avago, Meta, everything set up at that 2:45 to 3 o'clock. It was just amazing. It was Christmas in April. Really, the patterns were that good on the bigger time frames. The 15 and the 30-minute time frames were really the key to today. Unbelievable. You saw the stock Newsmax, stock was trading 14. The high was 265 today. You're talking about insanity. Well, look at Newsmax. Was NMAX, right? Is the symbol. Again, tomorrow, the tariffs are supposed to come in, right? But who cares? The market didn't care at all. This is all based upon technicals. Everybody that I talked to said, I'm bearish. I said, not my work, not coming into today. I'm not bearish unless these 30 and 60-minute time frames reversed, and I did not see that happening. So again, this is what I do here each and every day in my live channel from 9 to 4 to sktrading.live. It is really important to understand how I'm guiding you and educating you and teaching you these patterns off my chart overlay, which is on TradeStation and on TradingView. All right. It is important to understand how these patterns repeat themselves, and through dynamic learning and through the understanding that everything I do is based upon visualization and repetition. All right. So let me go and show you these charts for today. But again, today's theme, the bigger time frames dominated. It was Picasso, one Picasso after another. When I tell people when you're trading the futures markets, it's really important during the U.S. session they're looking at the underlying ETFs. I don't care if it's gold. I don't care if it's if the spiders. I don't care if it's the Russell. I don't care if it's the YM, the Dow futures. You need to look at the underlying ETFs. This was my years of research, and I taught this to some of the biggest traders in the world to be able to look at the underlying ETFs when you're trading the continuous contract / futures markets, okay? But if the S&Ps are going to rally 30, 40, 50 points, don't you think a majority of stocks like NVIDIA, okay? NVIDIA, perfect pattern. Everything set up at the 2:45, 3 o'clock time frame. Everything. NVIDIA, Avago, Meta, Palantir, even AMD rallied about $1.50. But the big names were the ETFs, the S&Ps, and the NASDAQ futures just launched. The NASDAQ futures rallied close to 200. Okay, on the patterns on the 30-minute time frame, the Qs, I was buying them below the range of 268.5. They closed up 4. Okay, so 4 points on the Qs, 200 on the NASDAQ, 50 plus on the S&P on that 30-minute time frame. But let me just show you what happened at 10:30 this morning, okay? So coming in, you can see how the 30-minute time frame was in buy mode from yesterday. MACDs are positive. The ADX are off. Really no big buying and selling pressure. And here's what happened. When the 15-minute time frame got deeply oversold at 10:30, all right, as I told many people, you were making new lows, and the MACDs were not confirming the low on the 30 and the 60-minute time frame. Number one, right out of the gate, that's a huge buy divergence right out of the gate. Again, making new lows intraday, and the MACDs, if I draw my horizontal line here, you can see that the MACDs on the 30-minute, and I'll bring up the 60 in a minute, did not make new lows. So on this pullback right here on the spiders right here, you were deeply oversold. When the 15 reversed to sell, when you got the oversold condition, you went from a trend to a buy disconnect. A buy disconnect is when you have the 30 and the 60-minute or 2 time frames aligned. You went from a trend where all 3 were bullish. The 15 reversed to sell, sorry. Okay, 15 reversed to sell. Now you have the 30 and the 60-minute time frames in buy mode. So again, if you look at the 60-minute time frame, and I'll just pop that right here really quick, you can see even here on the new low, the MACDs did not confirm the low. On the 30-minute time frame, right here, you can see the new low, all right, and the 60-minute time frame right here did not confirm the low. MACDs were positive on both the 30 and the 60-minute time frame. So this strategy is a buy divergence in a buy disconnect. All right. So now we get the big push up. I mean, in all honesty, did I think they were going to run 94 handles off the low? 94 points. That's $9 on the spiders. No, I did not. Okay. But waited, took some scalp shorts against it. All right. Took some dropped 7, dropped 6, 1. But then when they got above the 90 level, I turned to my oscillators. They were 97, 98 overbought on the 30 and the 60-minute time frames. You know, so here I'm thinking this is overextended. We were like 35 points from the price to the 10-bar weighted moving average on the 15-minute time frame that said they're going to drop. And boy, did they drop. They dropped right down to 65.5. They 66. They trade up to 78. They traded down to 59, 57.5, 59. They traded, and then gradually they just started drifting lower on some sell divergence off the smaller time frames, ultimately setting up what? The monster pattern on the 30. But I'm not finished yet, okay? I'm not finished yet. When you see the algorithm reversing to buy and the MACDs are above the pivot, when you get the overbought condition as you got right here, this is why we were short in the market. The strategy for this is when the algorithm reverses to buy and the MAC on the 15 and the MACDs are above the pivot, you can start taking shorts. Here's another one, and then here's the other one right here, okay? It really just ran about 60 cents higher. So again, based upon the fact that the MACDs are above the pivot line, here's the pivot line, right? The algorithm reversed to buy. You take the first short, it drops. You take the second short, okay? And then the third one. And this is the pullback I was talking about. But because the MACDs are above the pivot and the algorithm reversed to buy here, I knew that they were not going to make a new high. So even if you bought this right near the 10 bar, 599.34 on the spiders, you can see they ran about 14, 13, 14 on the S&P. When the 15-minute time frame got oversold again and reversed to sell, it set up what? The 30-minute time frame. Oversold into a positive MACD on the 30, oversold on the 30-minute into the positive MACD on the 60-minute time frame. It's over. Going higher. And I'm telling everybody in my community, I'm calling out longs in NVIDIA, Palantir, Amazon, Microsoft, right? MSTR, everything. It was just throw a dart, as I say. Throw a dart, right? And everything aligned, okay? If the S&Ps are going to move up 20, 30, 40 points on the S&P or handles or points or whatever, you know the spider's obviously going to move. And so these stocks in the S&P, Avago ran over $3. NVIDIA was trading below the 06, 07 and a half, closed near the highs, okay? So again, this big push up, market didn't care about tariffs. This is all about technicals. And this is exactly why and how I use my software to teach and guide you throughout the day. All these patterns that I'm showing you, you wait. Today was all about the bigger time frames. Okay, yes, there was a couple of great shorts and scalps off the 5-minute time frames, et cetera, et cetera. But most of it was basically the 15-minute 1030 oversold against the 30 and 60. When the algorithm reversed to buy on the 15, you had the great shorts off the little sell divergence with the MACDs above and the algorithm reversing to buy, which is a set strategy, by the way. Got the pullback around 130 on the 15, pushed up. I said, I don't expect new highs. S&Ps, I think, topped out around 78.5, 81 range, nowhere near the 94 range. Boom, right back down to 57.5, pushed up, and then just started drifting lower. And then around 2 o'clock, there was a pencil down move from like 66 down to like 38.5. And then it just started going lower, lower, lower. Waited patiently for the 30-minute time frames to get deeply oversold, as I just showed you right here. Okay. And then up, up, and away. Okay. Up, up, and away. Monster long there. Monster long. Monster long. Again, getting deeply oversold into the positive MACD on the 30, getting deeply oversold right here into the positive MACD on the 60. This is an absolute Picasso. If you look at NVIDIA, you can see NVIDIA on the 30-minute time frame. Look at the time we're talking about right there. Again, getting deeply oversold in NVIDIA into the positive MACD on the 30 and the positive MACD on the 60. All right. These are absolute. Look at Avago. Everything lined up. It was actually Christmas in April. It was absolutely that phenomenal. Apple, another great one, 221.14. Apple up 2. Okay. This was an absolute remarkable day here. Microsoft, beautiful. Look at Microsoft. Look at this, right into the 10 bar. We were buying Microsoft below the 279. Look at this, right here. Microsoft got down to 278.28. And look at this Microsoft, ran roughly $4. Unbelievable. These patterns are beyond powerful. Beyond powerful. Okay? All right? Now, these patterns repeat themselves. Or all my strategies are based upon buy and sell divergences. All my strategies are a buy and a sell divergence. 5 conditions, a trend, a buy reversal, a sell reversal, a correlation and a disconnect. Okay, correlations and disconnects have 2 meanings. One with the underlying stocks, and 2 with the continuous contracts and the underlying ETFs. And I teach that throughout the day. All right. Now, I will be announcing a webinar, a free webinar for those of you who are not a member. Okay. And I'll hopefully do that sometime next week. So stay tuned on that. Trading the markets, a lot of volatility here, monster patterns, longs, shorts, shorts, longs, okay? You got to understand, you need the right broker to execute orders using what's called a ladder system, or a matrix system. I'm also working on, and hopefully in the next 4 to 6 months, to be automating these strategies for those of you who cannot sit in front of a screen each and every day. Our support team is helping everybody. Really excited about the new members that are joining. It's such a great joy to start teaching new people. The people that have been with me, everybody's learned and they're seeing it, and it's clicking. So I'm really happy for so many people. Again, my legacy depends on your success. So today, these were the patterns. And again, basically the bigger time frame, the weeklies are still in sell mode. From this Friday, it will be 2 full weeks. And the pattern that was violated on the weekly was the first time it went into sell mode since November 17th of 2023. Okay, very, very important to understand that. Very important to understand that. Okay, when I come back, I will tell you what I expect for tomorrow. All right, so tomorrow there's no 8:30 number. We have some numbers at 10 o'clock, nothing big, but the real number is on Friday, the employment number at 8:30. So we have some Fed governors talking tomorrow. We have an 8:30, a 10 o'clock number here. Let me see what it was. It was a factory orders. Nothing really to take notice of. But, we still got to be patient. You don't trade into a number. Like today, we had the ISM number come out and the jobs opening number. I just went like this. We waited patiently, right? You just got to be very patient. Wait for the news to get out of the way, the dust to settle. So for tomorrow, I'm probably going to see if we do trade higher, okay? These 30 and 15-minute time, 30 and 60-minute time frames, I would want to see if they really, in all honesty, get to a point where you get a severe overbought condition. Remember, the weeklies are still in sell mode, so that's a problem for the market, all right? And you got the big negative MACD. After we pushed down to the 50, the first time we got below the 55.30 about 3-4 weeks ago, 2 weeks ago, I said I would be looking to buy everything because we were 280 points from the price of the S&P futures to the 10-bar weighted moving average on the daily. We got that pushed down to 55.09 on the March contract. When it rolled, now the low was 55.61. They rolled it, and then it priced differently based upon the June contract. And then we got the push up to 58.37. I said my first target was 57.80. My second target was 58.30. My third target was 58.50, and my fourth target was 58.80. Okay, and we got up to 58.37, and I came in, and during the day I said we have a 97 overbought reading on the daily with the negative MACD on the weekly, and I'll show it to you. And I said, look out below. The first target was 57.23 3/4, which happened to be the gap, okay, on the charts that I said will get filled first. And then we just got absolutely cabooshed after that to new lows for the year, 55.33 3/4. And yesterday at 10 o'clock, we had the big buy divergence, making new lows, and the MACDs on the 30 and 60-minute time frame on the S&P futures and NASDAQ futures did not confirm. Also, the daily did not confirm the low as well. And I'll show you both really quickly. So for tomorrow, I'm expecting if we do get any type of push up tomorrow and you get significant overbought readings, I probably look to fade them and see if you get some type of a pullback on the same pattern that you saw on the spiders on the 30-minute time frame. I'm hoping to potentially get that same type of pattern on the 60-minute time frame. So if we do trade lower and the 60s get deeply oversold, like I just showed you on the spiders on the 30-minute time frame right here, if the 60s look something like this on a deep oversold condition, then I'd be looking to buy them. And again, if we get another big push up here and that you get the 30 and 60-minute time frames into significant overbought readings like this, then I'd be looking to fade them. This is the move here. I'll show you the weekly charts. We rallied over 330 points in 8 bars in 8 business days. The S&P futures traded from 55.09 and a quarter all the way up to 58.37. I said at this juncture, this is the first bounce on the daily after the weekly went negative. And I said, overbought into this negative MACD. ADX is rising. Look at the yellow dots, which is the price action. We're going lower. And I said this gap right here would get filled. That's 57.23 on the S&P. We got filled. We made a new low yesterday. Not only did the 30 and 60-minute time frames on the S&P futures did not confirm the low with the negative MACD, with the MACDs positive, but also here you can see that the MACDs did not confirm the low. So if you take the low from here, you can see, I'm going to show this to you. Look at that number right here. Let me go to the S&Ps. I'm going to do something a little bit better, a little differently. Look here on the March low. You can see a negative in yellow, TEZ1 in the box, negative 123.55. That's where that yellow MACD line right here. Yesterday's new low for the year. Look at it, negative 72.33. That meant that new low did not, the price did not make a new low on this MACD. And I knew that the market was going to rip yesterday morning around the 10:30 time frame. Okay. So again, this is how I do my work each and every day. And this is how I teach each and every one of you throughout the day. All the patterns are based upon buy and sell divergences. And if you can master the art of divergences, you have mastered the art of trading. All right. When I come back, I got to tell you another story. All right. Another story that I hope will sink into each and every one of you. I have a list of things to talk about, but every single day it just amazes me that I have to stop what I'm going to talk about and prepare myself for the week on the for this segment from all the years of experience I want to just keep sharing with you. And then I get a phone call yesterday. Okay. And I said, you know what? I gotta mention this for the podcast for the third section. Right. So a gentleman calls me coming in yesterday short. That's his discretion, not mine. I don't believe in holding overnight positions. Okay. That's just how my brain works and how I've been. That's something that I choose not to have done. But again, it was his decision. Market pushes down to new lows, 55.33 Tesla yesterday pushed down, I believe, to 251 and change, I believe, right? Market ricochets up 140 points on the S&P, right? All the way up to like 55.33 up to 56.79, something like that, right? 75. So at the end of the day, he says, Steve, I got murdered. I said, what happened? He says, I had positions on and I couldn't be in front of the computers. I had to work and I just got hurt. I'm like, if you're going to me, that's reckless, right? If the market's down and you have a profit in a name in Tesla or whatever, the spiders, the Qs, I didn't know what he was really short or anything. And it's because it didn't hit your 250 number. The low was 251 and change. I think it was Tesla. When you just lower, if you're short a lot higher, wouldn't you just lower your stop, put a stop order in, a buy stop market, and protect in case, okay, you can't be in front of the screens. I'm jumping up and down like a baboon, okay, yesterday, saying I got 2 monster buy divergences. From 8 o'clock in the morning, I'm just talking to all my friends in my community, friends outside the community. I'm jumping up and down, and I'm like, they're going to explode. Now, did I think they're going to rally 140 handles? No. It was also due to the end of the quarter, okay? But how do you not put a stop order in a buy stop market to lock in your profits? What does Tesla do? Boom! All the way back up. rallies about $15, $18. Okay. And to me, that's irresponsible. Obviously, I'm not going to mention the person's name, but I had to share this with you. Okay. This is why I'm just like, I in the last couple of days, I've helped so many people. They got off the rails. I put them back on the rails. Okay. I gave them a lot of tough love. And I'm telling you, I have a lot of passion, and I'm really stern with a lot of you who I've come to know. Okay. I don't do it to be mean. I do it because I care, and because I want you to understand from my experience, I'm teaching you something that I hope will stick, that you can correct. Okay. But that just hit me yesterday. From what I understand, he was up very good money. He didn't put the stop order in. He couldn't be in front of the computer screens. He had to work, et cetera, et cetera, et cetera. And market exploded. Okay. So what I'm trying to say is, don't be self-destructive. All right. You're not bigger than the market. I keep saying the same things over and over again. You have a great profit in the trade. You were right. Market drop. You nailed it with your own money on overnight position. You can't just walk away. This market has no soul. I've been doing this 41 plus years. This market has no soul. Okay. But to be able to take money out of the market, to do things right and trade the right patterns and keep the same playbook and rules in place, I feel with my experience, me guiding you and teaching you, you can become a very, very successful trader. Okay, especially learning my software and understanding the patterns, understanding all the rules, the divergences, the conditions, the 5 steps, the understanding my indicators 1, 2, 3, 4, my numbers to the right, my terminology, my strategies, and the scaling in and scaling out process. So I hope this story resonates to a lot of you, but also that you never do that. Okay. But again, I can't tell you what to do, but it's just something that just ripped me apart. Okay. And I wanted to share that with you. All right. Thank you for joining me today on the Bull, the Bear, and the Ugly. Please join my live trading channel each and every day at sktrading.live. And if you have any questions, you can text me at 914-500-7484. You can follow me on X and Instagram and TikTok at official Stephen Kalayjian. And most important, please leave a comment. Please subscribe to my YouTube, SK Trading YouTube here. And I just want to say that it's a great honor to be able to be in front of you each and every day. I love what I do. There's nothing, I can't even imagine doing anything else. But I just want to say thank you for watching The Bull, the Bear, and the Ugly. God bless you, and God bless the United States of America. Be well, everybody.
Thanks for tuning in to The Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. If you enjoyed today's episode, be sure to subscribe at sktrading.live or on your favorite podcast platform. We'd love for you to rate, review, and join our community for more real talk and market insights. Until next time, keep trading and stay sharp.